So, we are going to start today with financial statements with adjustments. Okay, new chapter. This is the last chapter of your syllabus. Okay, so we have done financial statements already. So, now we are going to do financial statements with adjustment. So, there are different things of adjustment. What does adjustment mean? The word adjustment means that you are going to so the word adjustment means that you are going to record these items twice. Okay, that means once it will be shown in the trading account and then in the balance sheet, or again it will be shown in the PL account and in the balance sheet. Okay, so what are the adjustments you are going to deal today? We are going to deal with closing stock, outstanding expense, prepaid expense, and depreciation. Okay, so we are going to deal with this four items today. So let's see what is the purpose of doing adjustments. First, the need to do adjustments is to ascertain true net profit or loss in the business. Okay, what is the true financial position of a business? This we only come to know if we are adjusting the items. Okay, so let's see what are the items. First, I told you we are going to deal with closing stock. Now, what is closing stock? Closing stock is the amount of unsold goods at the end of the year. Okay, so the goods which are left unsold, those items are known as closing stock. Now, you have to remember one thing, that closing stock is valued at cost price or realizable price, whichever is less. Okay, suppose here they have given you one example that goods are purchased for 1 lakh. Okay, and at present the realizable value of that good is 1,20,000. So it is told that it will be valued at cost or realizable, whichever is lower. Okay, so which thing is lower? 1 lakh and 1,20,000. 1 lakh is lower, so it will be valued at 1 lakh only. Okay, and not at 1,20,000. Now suppose the realizable value is 90,000. Okay, think for example, the realizable value is now, yes, previously it was 1,20,000, now it is 90,000. So it will be sold at 90, it will be valued at 90,000 only, whichever is lower. 1 lakh and 90,000, 90,000 is lower, so it will be valued at 90,000. Okay, so now you know, you have already done in the previous chapter, two places are there where we are dealing with closing stock. Okay, where is closing stock shown? It will be shown on the credit side of the trading account, already you have done, and it will be represented on the asset side of the balance sheet. Okay, so if the closing stock appears inside the trial balance, you know, it will be shown only once. Where it will be shown? It will be shown only in the asset side of the balance sheet. Okay, but if is twice it is appearing, then where will it be shown? It will be shown only in the twice when it is, that means it is outside the trial balance when the closing stock is given. Then once it appears in the credit side of the trading account and on the asset side of the balance sheet. Okay, now the next item that we are going to deal after closing stock is outstanding expense. What do you mean by outstanding expense, children? Outstanding expense means the expenses which already you have incurred, but those expenses, those things is not being paid to you. Okay, you have paid it from your own pocket. Okay, and those expenses has not been given to you yet. Okay, so there are two treatments. The in your trial balance it appears in this manner. See, suppose wages and salary, these two are given in the trial balance, and you have adjustments. What are the adjustments? Wages is 20,000 and salary is 20, outstanding salary is 5,000. So how we are going to deal? So come to trading account. Okay, in trading account what you will do? First you are going to write this wages. How much is the wages? 2,20,000. Okay, so 2,20,000 when you write, then what you are going to do? With that you are going to add the outstanding always we add. Okay, so what you are going to do, two wages add outstanding 20,000, so it is 2,40,000. And what is the other treatment you are going to do? The other treatment you are going to do is with salary. So salary, where do we write? Salary we write generally in the PL account, and outstanding we add. Okay. So 55,000 and 5,000 outstanding is 60,000. So see, in the PL account we will do to salary 55,000, add outstanding salary 5,000, it will be 60,000. So balance sheet, in the balance sheet, these two items that are shown in the adjustment, you have to remember twice its effect will be shown. So where is its twice the effect? Once it has been shown in the trading and once in the PL, and next time in the balance sheet. How you are going to show it in the balance sheet? Outstanding wages 20,000 and outstanding salary 5,000. Okay. So this is the second item we have dealt. Next item in your book is, so first is closing stock, then we have done outstanding expense. Okay. Next it will be prepaid expense. What do you mean by the term prepaid? Prepaid, all you know why? Because we have done with phone. Okay. Previously we used to give the bill, phone bill prepaid. So what does it mean? That prepaid or unexpired means expenses which are already paid in advance. Okay. You don't have to bother for the expenses later on. Already you have paid them in advance. So, but when you pay something in advance, like now 2020 December is going on. Okay. But if you pay the advance of January and February, then will it be recorded in this year? This year it has got no value. So in this year, when we will deal with this expense, we are going to subtract, isn't it? So see how we are going to do. Insurance account, prepaid insurance, that means suppose for next year February already you have paid 5,000. Okay. So advance when you pay, then we have to subtract. So in profit and loss, you will write to insurance, and what you are going to do, less prepaid. Okay, prepaid always we subtract because this is something advance you have paid. It has nothing to do in the current year. Okay, and prepaid insurance is what? It is an asset, so it will be recorded in the asset side 5,000. Okay, so the third thing we have done is prepaid. Okay, and the fourth item which we will deal today is depreciation. Already we have done a big chapter on depreciation. You know, depreciation is what? The gradual decrease or fall in the value of its asset due to its constant use. So everything has got a expiry time, isn't it? So same with all assets. When you are buying and using it, it has got a time span. Okay. So treatment in final accounts, how you are going to treat depreciation. So depreciation, see, suppose it is done on assets. Okay, so here they have given you two assets. One is machinery, machinery is 5 lakh, and furniture is 80,000. Okay, next adjustment, in the adjustment they have given you, in that machinery you will charge depreciation 10%, and on furniture you are going to charge 20%. Okay, so how we are going to do? So you know, 10%, 10% of what? What is the value of the machinery? The value of the machinery is 5 lakh. So 10% of 5 lakh when we do, it is 50,000. And what is this? Furniture. Furniture is 20%. So 20% on which furniture? 80,000. When you do, then it is 16,000. Okay. So these two depreciations are already calculated. And now see how we are going to show the effect. In profit and loss, you will do two depreciation on. So it is machinery 50,000 and on furniture it is 16,000. Okay. So the effect will be shown in the balance sheet. How you show the effect? Machinery is 5 lakh. The value of the machinery is 5 lakh. Less depreciation is 50,000. So it is 4 lakh 50,000. And how much is furniture? Furniture is 80,000. Less depreciation 16,000. So it is 64,000. Okay. So this is the two effects which you will show. One in the PL account, another in the balance sheet. Okay. Now, four adjustments we have learnt already. It is closing stock. Then we have learnt. Okay. So let's solve the first example. Okay. Already you know the trial balance. Trial balance, there is nothing to see so much. Okay. Just see the adjustments. Trial balance you have done. Final statements you have done. Now see the adjustments, how we are going to deal with the adjustments. Okay, so here is closing stock. So what is the thing told about closing stock? See, it will be valued at cost or realizable value, whichever is lower. So cost is 24,000 and realizable value is 30,000. So whichever is lower means 24,000 is lower. So we are going to value closing stock at 24,000. Clear? Next thing which we are going to do is wages outstanding. Wages outstanding is how much? 3,000. Okay. So outstanding, how we are going to do? In the trading, you are going to write two wages. With that, add outstanding 3,000, and in the balance sheet, in the liability side, you will show outstanding wages. Okay. Similarly, with salaries also you will do. In the profit and loss account, you will write two salaries. With that, you are going to write add outstanding 2,500, and in the PL account you will show outstanding salaries 2,500. Okay, clear? Next we are going to do with prepaid insurance. So prepaid insurance, what you are going to do? Prepaid insurance is insurance paid in advance. So that you have to subtract. So what you are going to write in the profit and loss account, you will do two insurance, okay, less prepaid 300, okay, and in the balance sheet, in the asset side, you are going to show prepaid insurance 300. Clear? Last is provide depreciation on plant and machinery. So plant and machinery, whatever is the value, at that 5% depreciation you will charge, and furniture, whatever is the value, on that 20% you are going to charge. Okay, so let us start the sum. So you know, trading and profit and loss account we are going to do. Two opening stock, you know, two purchase. From purchase we deduct purchase return and then we write it in the outer column. Now buy sales less sales return and then we write it in the outer column. What did we talk about closing stock? We are going to write it at the cost value, because realizable value is more. The cost value is 24,000. So by closing stock it is 24,000. Okay. Next, to carriage inward, you know, two wages. Wages we are going to write in the trading account. With that, what we are going to write? Add outstanding wages. So how much is the outstanding wages? 3,000. So add outstanding, so it is 45,000. Factory related expenses will come in the trading account only, so it is 1,400. Okay, so credit side add, subtract the debit side, you are getting gross profit 1,42,000. Okay, so both side it's done, 2,88,000, 2,88,000. Now gross profit, from here it will be transferred in the PL account. Okay, so it is by gross profit BD. Okay, by discount received is one item which will only be written in the credit side, and in the debit side of the PL account, first you are going to write carriage outward. So when you write carriage outward 800, next item will be salaries. So with salaries you have outstanding salary, how much? 2,500. So add outstanding salaries 2,500. So it is 30,000. Next comes traveling expenses, rent and taxes, okay, general expenses, okay, and insurance. So insurance, what did I tell you? In insurance, prepaid insurance, whatever is given, you are going to subtract it from the insurance. So see here, two insurance 1,500 less prepaid, it is 300, so it is 1,200. And depreciation, how we are going to calculate? Look at the sum. What is given? Plant and machinery. Okay, so depreciation we are going to calculate on plant and machinery. How much is the plant and machinery? Plant and machinery is, amount is given 90,000. Okay, so on this we are going to charge depreciation, and on furniture, furniture is 8,000. Okay, so let us see how we are going to calculate. So depreciation, what is the value? Plant and machinery, it is 5%, and we saw it is 90,000. So 5 by 100, 5 by 100 is 1 by 20 into 90,000. Into 90,000 when you do, then it is 4,500. Okay, and what was the value of the furniture? The furniture's value was 8,000. What was the depreciation rate of depreciation? The rate of depreciation is 20%. So 20% means 20 by 100 is 1 by 5. 1 by 5 into 8,000 when you do. So it comes to 1600. Okay. So these are the two value of depreciation. So two depreciation separately you will write on plant and machinery 4500 and furniture will be 1600. Okay. So it is 6100. Now credit side we will add, it is 1,47,200, and if we subtract the debit side, then we get the net profit, that is 87,700. Okay. So net profit already we have got. Okay, now finally we will come to the balance sheet, and these all five items will appear in the balance sheet. Where will this item, closing stock, 24,000 it will come in the asset side. Wages outstanding and wages and salaries outstanding, these two will come in the liability side. Prepaid insurance will come in the asset side, and when plant and machinery and furniture will be written, from there 5% depreciation will be deducted, and from furniture 20%. Okay, so let us see the effect. Balance sheet, first we will write the liabilities. You have bills payable, sundry creditors. See, outstanding wages has come here. Okay, outstanding wages. After that you will have outstanding salaries. Okay, outstanding salaries you have written. Now with the capital, what you are going to add? Net profit you will add, and you will subtract drawings. So the balancing figure 1,44,000 will be written over here in the outer column. I had repeated, children, that when you add with capital net profit, three things are deducted in my previous video also. So you know that drawings is subtracted, next life insurance premium is subtracted, and one more thing, income tax. These are the three items which are personal expenses which are subtracted over here. Okay, now come to the asset side. Asset side you have cash in hand. Okay, bills receivable, sundry debtors. Next is closing stock. I told you closing stock will be written at cost price. Okay, next it is prepaid insurance, that 300 rupees that we have subtracted from insurance, it is an asset. And furniture, furniture and fixture is 8,000. From there you are going to subtract depreciation 1600, so it comes to 6,400. Okay, and next it is plant and machinery. What is plant and machinery? It is 90,000. Okay, from there you subtract depreciation, so it is 4,500. So when you subtract, it comes to 85,500. Now asset side you have got, do the total, it has come to 1,77,000, and liability side also when you do the total, it is coming to how much? 1,77,000. Okay, so see, they have given a note over here that closing stock will be valued at cost or realizable value, whichever is lower. So we have taken closing stock with that realizable value, we have not taken, that is 30,000. We have taken at cost price, that is 24,000. Okay, so finally we have completed the sum. So here balance sheet has balanced. Okay, we have done, this is the first sum with adjustments, and I hope everything is clear. Once more I am telling you, closing stock has appeared twice, once in the trading, final in the balance sheet, outstanding wages in the trading, and then in the liability side of the balance sheet. Salaries outstanding has appeared in the PL account. With salary we have added outstanding salary, and then we have finally in the balance sheet we have shown it in the liability side. Prepaid insurance we have added, we have subtracted from insurance. Okay, where we have subtracted to insurance less prepaid we have done. Okay, and in the balance sheet we have shown it in the asset side, prepaid insurance. And the last item is depreciation 5% and furniture is 20%. These two we have calculated. Okay, so plant and machinery it's 4,500 and furniture is 1,600. These two items we have written in the PL account in the expenditure side. Okay, and finally what we have done in the balance sheet where we have recorded the assets. From furniture, we have subtracted depreciation 20%, and from plant and machinery, we are subtracting depreciation at the rate 5%. Okay, so this is how we are completing the sum. So I hope you have understood. Thank you a lot for your watching.